For those who are just joining in, welcome. We're trying to just exercise a bit of patience. So by 8:07, we will officially start the review, right? So please let's exercise a little bit more patience for more persons to join. Thank you so much.
I can't hear you.
All right, good morning once again. I wasn't saying anything actually. So for those who said, okay, Rocco, no audio, there's actually audio. I wasn't saying anything earlier, right? Before now, I asked for the persons on the call to be patient for more persons to join so we can have a smooth session. So I think we can start now. When others join in on this call, they will just join us. All right, so for today, basically, looking at the basic fundamentals that we have, if we look at our forest factory, you notice that for today, we have more like a bit of quiet day for most currencies. We just have some medium impact, in fact, a lot of medium impact, so to say, except for the USD, where we have the ADP non-farm employment change. Now, this is the first week, and as usual, every first Friday of the month, we are expecting our dearly beloved NFP. All right, so hence the ADP non-farm employment change is more like the prelude to our NFP. So by 2:15 p.m. today, we're going to be expecting this one. So we are expecting major news from the US dollar. So by 2:15 and also 3:45 and 4 p.m. Right. So that is more like the high impact news that we have today. Also, the New Zealand dollar, they're currently having bank holidays. But that doesn't mean the currency might not really do something. Okay, but it's just to note that there is bank holiday for today in the New Zealand, right? So we can do more of technical trading for now, except for the USD, which will come up in the New York session around 2:15 p.m. all through to the evening time. So let's quickly dive back to our charts. Now, don't forget, we have some major events coming up also. The equivalent of NFP, we're going to be having that tomorrow for the GBP, and then on Friday, obviously, we have our NFP, all right? Then we have that of Canada as well as the USD Friday. Hence, there's going to be volatility in the markets. Traders can maximize profitability during this period. So it's expected that you can fund your account in order to take advantage of all of this. So go into our charts now. And let me start from the USD JPY. So as we know, the JPY can also be a safe haven currency. Now, the USD, if you look at my what do I call it now? My dollar index, so to say. Dollar index is the measure of the USD vis-a-vis other major currencies. So I have the USD as well as other major currencies right here. And you obviously see that the USD is not really strong. In fact, it's just beginning to pick up strength. I think it was almost like 16%, 10 to 20% for most part of this morning. As of now, then just trying to gain some strength. I think the highest I've seen it today is like 30%. Now, basically, it's fairly weak. It's not really strong, right? Now, but the Japanese yen, on the other hand, has been quite strong. In fact, for most part of this morning, it has been strong. It's what's happening right here is just even losing some steam. And you can see the resultant effect on the chart right here. You can see all through yesterday was very strong, pulling down. Then from this morning, also strong, and it's pulling the charts also down. Because this is USD, it's supposed to be the base, and it's supposed to be pulling the currency up. Now, if I go to my chart and I zoom out, you see the trajectory, which is for the last few days now, few weeks, the USD JPY, after ranging, started to pull down, right? So if you look at my chart, well, before now, it was going to the upside, got to a point, it started to range, and now we see a shift in market structure, and price has been pulling to the downside. Hence, it gets to key areas actually, because what you see here is what we did last week Wednesday. I was just trying to tell us that prices at this point, I expect a break. I expect price to pull down. Rather, if price pulls down to this level, then we are obviously buying this guy back to the upside. And from that day, I think it pulled up first. 2 days later, then price all worked its way all the way to this level here and pulled back to the upside. Now, the challenge now is price is no longer going above this our previous high here. This is our previous level. Now, which is the previous support that price took out. You can see this support level, support level, support level. Then price took out this support level, and this support is trying to serve as resistance area for us. So how do we trade this particular uh, chart now? How do I trade this chart now? I see some supply areas right here, and price has come all the way back here. Now, most persons will just say, oh, let me buy this guy back. Let me use my 4-hour time frame so you see clearly. Now, this is a major area where price can, is expected to pull back up, which it has done once, it has done twice. Now, this is the third time. But you notice that for every time price gets to that particular point, it looks like price is not really having that momentum to really, really push to the upside. Okay, so you can see it's gradually sliding to the downside, right? Gradually sliding to the downside. So what am I expecting for today? I still expect USD JPY to be bearish. All right, I still expect it to be bearish, but this is what, am I not just going for that particular sell order? I think this is what I would do. If price can give some retracement to this level, then I'll continue being bearish, right? The price can give some level of retracement, then we can continue being bearish. Let me see how it looks like on my lower time frame. All right, so if price can, give me some good retracement, then we'll continue pushing price to the downside in the long run. Perhaps if price gets to this level, see, perhaps if price gets to this, I think there's one here because there's a lot of liquidity line around here, one, and there's another here. Price might start turning to the downside. Now, some of the things that are keeping the US dollar weak is the fact that there's been a lot of controversy in Donald Trump's policies, especially with the new tariff, 10% newly imposed on goods being imported from China. So the Asian economy is trying to retaliate. China has not yet fixed her own import duties or increased it from goods brought in from America, which is going to affect America also. But instead, Japan, that is Tokyo, Japan, which is also one of the second largest economy, they have taken steps to increase their own tariff for goods coming in from America by also like 10%, right? So it's affecting the US economy badly. All right, so you can see the dollar is not pulling to the upside. And some of the advantages what we are enjoying for the gold already, because once dollar is down, people are being careful. They are moving to safe haven, which is another thing such as gold. All right, so you don't have enough momentum for the USD. I expect price to keep pulling to the downside. Obviously, break this particular level. So we should be bearish for the USD JPY. Now, this is NZD USD. Like I said, remember NZD bank holiday. But something interesting right here. So if I go to my daily time frame, you see how massively price has been pulling to the downside, right? Let's see. Okay. So you also notice this is my daily time frame right here. This is daily time frame. So if I pull this now, you see also this levels right here. If I join it to this, but I want to be very specific, so let me bring it a bit down. Okay. All right. So for my daily, now if I go to my 4 hours, you will also see, I want to see how the trend has been pushing price smoothly to the downside. Let me do it on my daily. I think I'll have a better trend line on my daily. I think something like this. Okay. I might still need to adjust it from my lower time frame though. Now, something very interesting. If I zoom out the more, let me go to my weekly time frame. If I zoom out the more, now this is my weekly time frame. And on my weekly time frame, you will notice that price hit this level. That was around 2020, January 2020. Hit this level again around 2022, right? Now, is hitting this same level again. So we're more having like a triple bottom on our weekly time frame, right, for the NZD-US because I've been pulling down for a while now. Hence, if I can gauge this, okay, so this is how it would look like. So price is like giving me some range now. So you notice that since price got to that level, it's been ranging. It's been doing more of ranging. So what it possibly can signify is a possible change in character, which is price might decide to start pulling back to the upside, right? Price might decide to start pulling back to the upside. I need to adjust my trend line so I'll see exactly where the break happens. Now, I wouldn't want to keep selling this guy because price is at a very significant low, a very significant low right now, right? For the NZD, price is at a very significant low. So it will be unwise to keep selling this guy to the downside, like very unwise, okay? So now I'm just seeing that. So for instance now, um, if I want to, if I'm looking out for a trade now, possibly looking out for a buy trade. So look at what happened. Price entered this zone, started to range, right? Started to range. This was a high. Price came all the way down, took this level. This is the last recent high. So you see this level right here. So the moment price can take out that level, which price did actually, price took out this particular, so that you see what I'm talking about. I think I need to do it on 4-hour time frame. I just wanted to see that there's a possible change in market structure right about now. This was a high, price came, gave another high, which took out this low here. Now price came and it has taken out this high at this level, which is a market structure shift, right? Now it was on its way doing its retracement, following our trend line. Now you could remember the gap that we had on Monday, the massive gap that we had. So it was that gap that brought it back to the downside. It was that gap that brought it back down here. If not, most likely wouldn't have even come back all the way to this level. Now, you can see how fast price recovered. In fact, it took the whole of that day, price recovered massively, a little bit of retracement. Now, price is above. So, I think our NZD USD from this analysis is going to be looking bullish. And if it's looking bullish, it will be bullish for a long time, right? It's going to be bullish for a long time. So, I'm no longer selling this guy. We are looking at buying NZD USD, so that is for USD. The USD CAD. So you can see that this instrument has been pulling to the upside. Of late, it had some significant range. Let's see. It had some significant range right here. Okay, some significant range. Let me see. Good morning. Um, Wait, can everyone hear me? Looks like I'm here by myself. Ropo Okea, Olatunde Sanusi. Can everyone please hear me? I would have done this check before we started. Please, if you can hear me, just drop a yes on the chat for me. Okay, okay, all right. Thank you so much. Thank you. And I really hope you are following, what we've been talking about here. Okay. All right. Thank you. Thank you. Aha. So now let's look at USD card now. There's a part of the analysis I really want to bring to you awareness right here. Now, this is my 1-hour time frame. Okay. 1-hour time frame. Let me see. Hope it has not gotten to the highest high. Okay, good. Now it's looking like a a reverse of what we're having for our NZD-USD. For our NZD-USD, we are having like a triple bottom, right? But for our USD CAD, we are having like a triple top right here. So 1, 2, and 3. Look at this is my weekly time frame. This is my weekly time frame right here. So this is the first. This is the first. Let me just put a line here. The first, the second, and we have a third. And you can see how massively bearish price became, right? So this is giving you like an idea. Now let's look at it on the daily time frame. This is on the daily time frame. See the range? You see how massively pulled to the upside. Now this was a massive gap that took it above, slightly above our height, possibly to sweep liquidities around that level. Now we are seeing the real movement all the way back to the downside. So this is how it also looks like, all right? So in the long run, I'm expecting the USD CAD to be bearish. In the long run, I'm still expecting some more bearish momentum. But I need price to break below this support level right here. You see the support level I've had here. I need price to really, really break below it. So this is the main support. All right, this is the support area. All of this you are seeing, they are sweep of liquidity. Like more like what you can say a false break. Price goes below your support, look like a breaking, but comes back again, all right? Because it didn't hold. So this is still the support. This is still the support. We just have a number of times price swept liquidity. See how massive it came back again, all right? So sweeping, coming back again. So if you are asking, oh, why didn't I move my support down? No, the main support is at this level. These are just showing me false break, false break, false break. And you see that I keep bouncing on my support again, all right? Now, it could either be a sweep of liquidity, what price is trying to do here, but I'm seeing some kind of build up, and if you're not careful, price will continuously push to the downside, all right? So, but in the long run, I expect some bearish momentum. And why am I expecting that? From our weekly time frame, you will see that every time price has gotten to this particular level right here, you can see how massively bearish it becomes over time. So massively bearish it becomes over time. So all things being equal, they're expecting the same thing to happen. But I need price to break below this range first, just like it did around this level also, right? So NZD-USD, we are looking at being bearish if price can break below that particular level. So remember, see what I'm talking about USD. You can see USD being massively weak. And that is obviously giving some more momentum to our dearly beloved gold. So if we go to gold right here, you see how massively gold, gold is not stopping. It's just going higher and higher. Now, this is like a record high again, and gold keeps pushing, right? You would obviously agree with me that this is like a record high. Sorry, let me adjust my, okay, moving average. All right. So this is a weekly time frame. This is like a record high. Price has broken above its highest point, previous high, did a little bit of a retest, and you can see pushing higher and higher. So what are we expecting for today? Are we expecting a retracement, or should we expect a continuous push to the high side? So hence, my moving average has been like a very good indicator to help trade this particular gold right here. So you can see, but what I do is I use my 4 hours moving average, 20 moving average period, 20 and 51, 20 and 51, sorry, 21 and 50 rather. This is my 21 moving average, and the green line is my 50 period moving average. Both are exponential. Both moving averages are exponential, right? You can see them right here from the settings. Period is 21 and shift 0 exponential, right? Exponential moving average, including my 50 moving average. 50 and is also exponential. Now, some might argue, why not use simple? Exponential responds faster to change in prices than the simple. So I want to catch that move. That's why I'm using exponential, right? So price is more like respecting my 21 and 50 period moving average smoothly. That's why I love having it on my chart when it comes to gold. Now, what do I do with this moving average? So I wait for price to come back to my moving average. It bounces off it, bounces off it, bounces off it, especially when gold is having some serious momentum like now, when the dollar is really down. So then, now this is what happens. So what I do is, you can see where my line is. I have one here, my 20 moving average. I have one here. Then I have another one, my 50 right here. All right. Now, I want it to coincide with where I have some level of liquidity to the downside. Right. Now, what do I mean? Instances where you see that price does like a false break. Okay. Let's say this, for instance, this level, for instance, you notice that previously, when price hits here, this is where I have some level of liquidity, right? This is where I have some level of liquidity. Hence, price might not really stop when it hits my 21. It might go down to catch the liquidity below. So it will look like a false break. But after sweeping it, it starts going back to the upside, and to the upside. So in this case now, this is where I have some good liquidity, right? See all this level right here. Aha. So I have them right here. Now, what do I mean? I need price to come back to this level. So if I switch to my 1 hour, everything is done on 4 hours, the analysis. If I switch to 1 hour, I will now want to see where those levels are. Now, this is where I'm expecting price. These levels, right? Good. So what it means is, potentially when price is coming to the downside, it will look like it's breaking below my 21, looking like it's breaking below my 50. But all of a sudden, it starts pulling to the upside. So these are instances where you find like almost a false break, right? Instances where you find like a false break just to tap into this liquidity level. Can you see what I'm talking about? All right. So that is what I'm targeting right here. All right. So you can see the same false break. And why the false break is trying to target this level. It's targeting this previous liquidity area before this massive move to the upside. Hence, you might expect it to bounce off here. It might not. All right. But the best trade will be if it can come back all the way to pick this. And for it to do that, it will look like it's breaking below your moving average. It doesn't mean you should start selling. All right. Means price want to come, sweep liquidity, then you can start. If you are scared, what you do is you can wait for price to go back above moving average before you continue buying. Right. If you are scared, for instance, now you can see this level here. So yes, potentially there's still a 20-30% chance that for it to break below moving average, price might want to change and start going to the downside. Yes, but because I have fundamentals backing up price going to the upside. Except the fundamental changes and USD begin to have consistent strength, then I'll be looking at selling gold because they are opposite directions, isn't it? So my 4-hour period moving average will give me where price should touch, especially when it coincides with previous liquidity levels, which I showed us earlier. Then I want to see where those levels are when I switch to my 1-hour time frame, right? That is where my point of interest is going to be. Now, for instance, this was my point of interest waiting for price from previous liquidity. And for it to do that, it will break below moving averages. So if you are scared, allow it to break below, come back above. The moment it comes back above, then you can now join the buy, right? If you can understand what I'm saying, then you can join the buy. So I'm expecting price to, edge down a little bit, then continue pushing back to the upside. Now, from my 4-hour time frame. Now, on another thought, there is still on my 1-hour time frame, there is this level right here that might be significant, and it's just around where my 21 period moving average is on my 1-hour time frame. Remember, my 4 hours is where I do my analysis. Then my 1 hour is where I want to take my entry from, all right, for gold, because I can use 1 hour because if price wants to go, it will go. If price wants to go, it will really go. So I have this level here and this level here, but I would prefer price coming to this level right here. So in other words, I'm expecting gold to continue being bullish in the long run, keep pulling to the upside in the long run, right? So Let's see. GBP, JPY. GBP, JPY. Okay. Like I also said, this instrument rather, so it's having some uh, momentum, but the upward momentum has been stalled. Oyeshino Oyekomi. Okay, someone wants to say something. Uh, Mr. Shina, you want to say something? Quickly, you can unmute, then ask your question. You can go ahead, please. Yes, at V. Yes, that is exactly it. If you get to that first level, then you can be bullish. And if you break the first level, then you come to the second level. But in the long run, you should respect one of the two. Right? You should respect one of the two. Okay. I don't think you want to say anything. All right, so let's just continue. All right. Let me do GBP JPY before we go to other ones like D. Okay, so for this particular instrument right here, like I said, if you look at it carefully, you'll notice that price was massively bearish, then it started giving us some bullish momentum. Now, obviously, becoming bearish again. But if you look deeper, I think price has been really coming from an area of supply, especially on a 1 hour time frame. Now, what do I mean? Let me break it down for you, right? Let me break it down. For breaking it down, I need you to see the candles. I really need you to see the candles. You see, there are certain patterns that we look out for on the charts. There are certain patterns. Something like this. When price is bearish, right? So you see price does this, then it can either do a little bit of this, or it does like this. It either ranges or it goes slightly to the upside, like just slightly. Then it continues to the downside. This pattern is what we call the drop base drop pattern, right? Drop base drop. You can see drop base drop base drop. Now, sometimes the base can be longer. Like I said, sometimes it might just be range, and sometimes it might be slight push to the upside. All right, slight push to the upside, but still drop again. Now, whichever one is going to do, most times you never can tell 100%. We are not trying to predict price 100%. We are trying to work with whatever price has done. So I work with previous information, work with previous data. You will be doing yourself a disservice most times by trying to anticipate the move 100% of the time before it happens. No, just use previous data to anticipate the likelihood of price obeying all things being equal, ceteris paribus, right? So what do I mean? If I have a drop base pattern, now those bases are like very important areas for me because the base is where most times the liquidity lies and price moves based on liquidity. Price moves based on the liquidity are just like your orders, right? If I have my goods and nobody is ordering, I cannot make sales, right? I have the goods, but I need the orders for price to move, right? So I have the goods, price move in that particular order. So now your job is to find out the order, is it coming from the buyers or coming from the seller? So the drop base pattern is coming from the sellers, while let me see if I can have some rally. The opposite of drop base is the rally base, rally base, rally base, rally base, rally. You see, this base was slightly down, right? Rally, range, rally, down, rally. So we have rally base pattern. That's the opposite. So this is it. This is for buyers. For buyers now, we have the rally. Then we can have the base, which can come in any form. It can come in form of range. or it can come in form of a drop. But in other words, it's still like the base, right? So you can have this pattern, rally base, rally pattern. Okay. All right. So if you now have price being bullish, we keep following this particular pattern in order to trade it. So what do I mean now? So I have a drop base drop pattern. I think let me do this on 1 hour now. I think it will be much more clearer on 1 hour. Oh, sorry. There was something I wanted to explain on 4 hours. I'm so sorry. If you can understand this, right? Let me take my time to explain this. If you can understand this, you can just simply replicate it on any currency pair. In fact, you can even move it to indices. It works a lot with indices also, right? You can move it to indices and it will work. But you need to understand the pattern. So chart patterns, this is what we call really chart patterns now. And I'm just giving you an excerpt from supply demand. Market moves based on supply demand. Either you are using your moving average indicator to help you know when to be buying, when price is in demand, or you are using your RSI, use your Fibonacci, whatever indicator you use. The whole summary is that you are buying, you are demanding, all right? And if you are using the indicator to give opportunity to sell, you are in the supply zone. All right? So this is it now. So I see a drop base drop pattern here. Now remember, your base, they are very significant, right? So after this drop base, you see the whole of this base here can be very important, which means potentially when price returns, there's a possibility that this base will stop price from going up and comes out. Now, if it does that, then it's going back to the origin, which is this origin here. Now, remember, this was where we had a change in character. So this might not count as much, but I now have a drop, a base right here. So let me shift it to this point. Remember, this video is on YouTube also, so you can have access to it. For those who might be confused, all right, don't worry, you will have access to this video again. So I mark the base and I extend the base to the future, right? Good. So, which means that if price was to continue to the downside, one of two things is that it does a drop, base drop, or drop, goes back to this point and continues dropping. So the base are significant points, right? Then let me take this out again. So whichever way it does it. Now it did a drop, base drop again, isn't it? So I mark the drop again, the whole of this drop, and extend it to the future. Now, after price did this drop, base drop, price didn't really go back to this point here, right? Now, this is another base. So in other words, price can potentially come back to this base and keep dropping. Price didn't do that. It finally did it at this point here and kept dropping. So I would have had my sell order to this at this point here. Now, if price doesn't sell at this point, doesn't mean it's 100%. Then where is price most likely to keep selling from again? At this level here, right? Especially when you are doing it on your lower time frame. Because once it start happening on your higher time frame, it's a possibility that price is beginning to change character, right? Good. So you most likely want to be doing this on lower time frames. Hence, we do it on our 1 hour time frame. So I have let me take this out. So in a minute or two, I should be done with this pattern. Then we'll just replicate it on other instruments that we have. So I have a drop, base, drop. This one did not really give us a range as a base. It was giving us a support level right here. Okay. You can see, I think I marked that level at some point. Okay, so drop. So if it hits a support, it can potentially go back to this particular level. So if I mark this point here, you will see. Just give me a minute. Let me explain. Which one am I doing right here? Okay, I think this should be the chart I'm trying to deal with. Excellent. So See this base? This base now, this drop, this one gave us like a little bit of rise. All right, good. So I mark the whole of that particular level right here, the whole of the base. So you can see massive drop, right? So just wait for price to go back into that level to continue selling again. And after selling, wait for price to take out this previous low. The moment it takes it out, there should be another base from that downward movement that took this out. So I have a base before a drop, right? Excellent. So what I do is I mark the base again, this base. Now this base is slightly larger, which is this, from here all the way up here. All right, from here all the way up here. Now what do you notice? What do you notice? After this base and this drop that took out the previous low that we had, the previous support here, notice that price came back there. What happened? We have a sell order to the downside. Price came back again. We have a sell order to the downside. Right, so I'm just trying to make you understand. This is what I call like the order flow strategy. Okay, it helps to know which direction is price headed. What's the current trend? Is it an uptrend or a downtrend currently? Which might last for few days, few weeks, or possibly even few months. Right. So the longer it lasts, the better it is. So you can keep maximizing profit from that particular instrument alone. So in this particular case now, GBP, JPY. So obviously, I'm looking out for sales, but price has gone to the upside. So it's possibly still trying to work its way to the downside. So one of two things will happen right here. One of two things is going to happen right here. It's either price goes back to this level to continue selling, right? Or price will just use what is currently happening right now as a base to continue going to the downside because there's a build-up. So it might be another base drop again. So that's why I said you don't try to predict price 100%. Just look at what price has done and try to follow it from its track record. So if it does this one now, if it does, let me show you what price will most likely do. So if it does a drop, base, drop, a drop, base, drop pattern right here, I will need this drop to go far, right? I will really need this drop to go far. So what happens is if you can drop all the way, that means breaking this particular low right here. What I will do is this point is where I will now mark again as my new level. Remember, we are interested in the base, so I'll just take this as my new base. So once it drops, I will expect that price comes from here, retraces into this base, and I continue doing what? I continue selling. So what price does determines what I will now do. All right. So whatever price does, you would now follow it from there. Euro USD, yeah. Currency trend is passive, right? Well, I might not understand what you mean 100%, but this is live right now in the market and price. This is the real deal. This is what is currently happening in the market. Right, this is what is currently happening in the market right here, and it's yes, we can say it's passive. I think I get your meaning now. We can say it's passive, right? Meanwhile, you don't use it to as the basis for your analysis 100%. It's just like a confirmation tool. Helps me to now confirm what I'm actually seeing in my chart 100%. Okay. So let's quickly move to D40, D30, like the same, you know. Mr. DME indices masters. All right. Okay. So if we are to take what we just talked about from the GBP JPY now to see how this thing happens. Good morning, sir. Good morning. Come on, move back. Okay. So you can see the order flow is like we are in a buying spree. Like we've been in a buying spree for US 2000. Okay, we've been buying this guy, which means we'll be focused on demand. So we are looking for certain patterns, right? And what is that pattern? What is that pattern that we are looking for? So you have, now look at it with me. You see this rally, base, rally, isn't it? Right? Rally, base, rally. So what you do is, if I can have this, a rally base, the whole of this base, right here, if I can have it. So my good trade will be potentially waiting. So as price is going here, there might be a drop, or it might not drop and just do another. So for instance, rally, base, rally, right? But in this particular case here, it didn't drop. But check the next one. So if I mark the whole of the base, right, for this particular one, you notice that after I moved rally, it dropped back to the base where I will now have my trade. Okay, it dropped back to the base where I'll have my buy order again. And also here, so you have rally, base, rally, right? Rally, base, rally. So if I mark the base again, price comes back to that particular level. It's just a simple order flow strategy. But you need to pay attention. Price went slightly lower, but still came back. Why? Because the momentum is still to the upside. Right? The momentum is still to the upside. Now, this is just a massive gap to the downside, and price is currently trying to cover that gap. So one of two things will most likely happen for today. We are seeing already after the gap down, price is trying to do a rally. Okay, the rally is not straightforward. It's just choppily going to the upside, choppily going to the upside. So let me use this one to tell you that there are times where if you are not seeing the pattern you are looking out for, it's advisable to stay out of the market. Look for another instrument that you see the pattern you are looking out for. Just look for it, all right? Look for it. Now, to be honest with you, US 2000 is not so clear as to what we've been experiencing previously, right? I need a rally base, or a drop pattern. I'm not having any of it currently, right? So one of two things can happen. Price can drop back to this side. You see, you can drop back here. This point here, it can drop back to this point. Aha. Or it might just do a range and continue pulling to the upside. So that's one of the two things that price can do. So in other words, if price can break above this level here, then obviously it's going to cover that particular gap. So we can buy, but on the other hand, it can still pull down to the downside. We are expecting what will happen for US 2000, right? So my advice, US 2000 is also clear. The same pattern we are seeing on US 100. But US 100 looks slightly better. US 100 looks better, right? It looks better. So now notice this particular order we have here. Especially when you have a massive move in a particular direction, check if it has a base before that move. If it does, the base becomes very significant. So what am I saying? Now, there was a base before this particular drop right here. So you call it resistance, but trust me, it's not always resistance. It's not always resistance. Now, this became significant. Drop, this is not, it didn't give us like a confirmed base right here. It just dropped swiftly to this level, came back to this level again. Now, one of two things will happen. In price trying to work its way possibly to this downside, the way it does it determines how you trade it in future. So perhaps, if not because of this drop, or let me look at instance where something like that happened, so you'll understand what I'm trying to say perfectly. Wow, we are almost out of time. Almost out of time. Almost out of time. All right, excellent. So you can see a drop base drop pattern here, right? So because it didn't just get all the way here, it was targeting this low, right? It was targeting this low from this upside, it was coming to the downside. And before it got there, it gave us a base. It gave us a base. So I mark the whole of that base and extend to the future. So what happens is that for the fact that it hasn't gotten all the way here, notice that it came back, tapped into the base, tapped into the base, tapped into the base to finally get to this level, right? So if I'm selling, I need a drop base drop pattern. If it has not gotten to a lower target, I'll wait for it to rally back to that base. I continue selling, right? So that's what I'm trying to explain for us to understand what we're trying to do. So in other words, price moving to this side. Now, has it gotten to this level right here? If it hasn't gotten to that level, we will be looking for a base, but there's no base here. It was a gap to the downside, right? It was a gap to the downside. So since there's no base, then price is obviously trying to work its way back to the upside. So trying to work its way back to the upside. So in that case, I'll be looking out for demand levels. I think I marked this, when did I mark this? On Monday, yeah. The moment the gap down happened, I think I marked this particular levels right here. Okay, so guys, from what I just marked here, what do you think? What do you think? Are we to be buying or are we to be selling? Are we buying? You can just type it for me using this particular trend line. Tangerine says buy. I'm sorry if I didn't get it correct. Yes. Okay. All right. Who else? Who else? Who else? I need more responses. Okay, so you know what to do. All right. Now, remember our moving average strategy where we talk about possible false break, right? Good. Now, in that instance, if the false break is going to happen, it's going to force its way down to an area of liquidity, which I have as a cluster here. So I have it as a cluster right here. I think it has even tapped into that particular level. If I want to make it larger, somewhere around here. So in other words, can do this, then go back to the upside and find its way all the way to this level here. So what do I mean? You see a rally, base, rally, right? So if you mark this previous base, all the base to the upper part of the base, what you notice? You notice that price came back to tap into this base and continued rallying back to the upside. So in the rallying back to the upside, there's a base right here. So price can potentially come back to the base before continuing. It's just like you jogging. You are jogging, you want to jog for like 2 hours. Most often than not, you can't just go 2 hours straight. You will jog for like 5 minutes, 7 minutes, 10 minutes highest. Then you just, you are still moving, but you slow down. You walk for a while. You can walk for like 2, 3, 4, 5 minutes. Then you jog again for another 10 minutes. So that's what price is trying to do. In walking his way all the way to the upside, it doesn't just go once. So it will do a rally base. Take a break, go take a break. Sometimes you can just stay where you are, relax for a moment, right? Stay there, range, look, get more energy to continue your journey. So that is what price is literally doing right here. So our targets will be back to these resistance levels here. Wow. What else? I think, let me just look at Euro USD lastly, and we'll call it a day because yes, and there's more hope for the Euro USD. So the same pattern we talked about, you see this everywhere. The same pattern. That is why it will look like I'm marking, but sometimes I can mark the top of the base, depending on what you are trading. But the base is the most important point. So you see a drop, base, drop. So I mark this base down. Why? In case price keeps pulling to the upside, this is where I'll be looking out to sell from, right? I'll be looking out to sell from here. Then there's a drop all the way here is a base. After this massive drop, you can see a good base again. Let me extend this. You can see the base. So you notice that after price dropped, instead of continuing dropping, it went back to the base. I'll sell again, sell again, sell again until it dropped massively again. Now, after dropping massively again, what I did in Euro USD, I marked the top part of the base because Euro USD can give you what we call like a false break. So I want to see the top part of the base. I'm so sorry, we're out of time. I have another meeting by 9. I have another meeting by 9, so I won't be able to do that. I'm so sorry. So I'm at the top part of the base. So you can see the whole part. So if price can rally back to its sell, so why did I mark? Because there was a drop base, because it didn't get to this target. So it got here. So potentially when price got here, it dropped. Now, like I said, if it doesn't respect this, it goes back to the next one. It looks like it was having some momentum, but came back to this upper base again, if I extend this. So if you notice, that's why I have quite a number of them. I just leave them there. So I wait for price to get there, then I execute my trade, right? So now we have a drop, a base, and a gap to the downside. So how do I use this to trade Euro USD? This base is like sincerely wide. It's a bit of a wide base, okay? I have the base right here. Price just retested the base. And so I'm expecting price to get here for me to have a continuous sell to the downside. But please note that it might get here or get here because the USD is currently down. And this is Euro USD. My force is way up to this side. But in other words, I will still be bearish. All right. I will still be bearish. So this is how much we can take for today. I think taking my time to explain this particular pattern really ate into our time to analyze some other instruments. For those who I couldn't analyze Konunduku, I'm so sorry. And for the person who dropped AUT20 and GBPAUD, you're the same person. I'm so. All right. I hope I'll be able to do that next time when I'm doing this review, which is next week Wednesday. So thank you very much for your time. I hope you have a wonderful and a profitable day. Enjoy.